Welcome back to here. Today we've got Richard joining us from the UK, and Anthony and I are here from Sweden.
Hello.
Hello.
How's it going?
Today's show.
It's going well, mate. It's going well. Just got back from work. I just had a shower. I'm all pumped up. I'm ready for the podcast.
That's said to be good for your hygiene. And talking about hygiene, how about financial hygiene? How's things looking? Now, I mean, maybe we should give a background. Like Richard is often talking to me and Anthony about crypto, and I get involved, but I'm still pretty lost in this subject.
Yeah.
I mean, I do have a little bit of crypto, and I saw that you said earlier Bitcoin's gone up a lot because you tell why has it gone up yesterday?
So yesterday, a Bitcoin spot ETF was approved, and 11 companies that filed for this application with the SEC. It got rejected first time. This is a few months back, but yesterday it got approved. I didn't think it would. Because obviously they're trying to take crypto out. I think they were just stuck between a rock and a hard place, and the SEC they had to go with it. I don't know. I mean, I don't know, the politics behind, but I'm happy they've pushed it through. It means now that the average investor can then invest through an investment firm, and this is like an easy access to buying crypto. They're not actually buying. They're not physically buying the real Bitcoin themselves. They're buying like a token, which represents Bitcoin. But because it's a spot ETF, not a futures ETF, it means that BlackRock or whoever is buying this crypto on behalf of their client, they need to buy the physical Bitcoin. And that sounds a bit weird because we're talking about physicality and crypto,
what happens to the money that they buy the Bitcoin with? Where does that money go?
The money, I mean, BlackRock, it gets exchanged. It goes to an exchange and gets exchanged. So they hand their money, and in return they get Bitcoin or a voucher saying they own some Bitcoin. So it's giving them exposure in a through an investment firm who are regulated. So a lot of people, I heard a statistic today actually, that the average investor is like the age of 60 something, because a lot of old people, predominantly that's their, main source of income. And, you accrue money throughout your life. So you've got the most amount of money in your life when you're at old age, 60s, 50s, 60s. So yeah, the average age of an investor is like they're in the 60s, and obviously they're not buying crypto. They're not buying Bitcoin the way I would buy crypto, by downloading an app, going that way, writing down the seed phrase. It's just very technical, and it's very, no one gets it. Even people my age don't get it. Leon,
because I've been diving deep now into the old crypto, to the different apps, the different banks, the different applications, the different cards. Basically, I've transferred 1,000 krona, that is about
£100.
Yeah, something like that, to Avanza. And now I got the opportunity to buy certificates on my ISK account, which basically means that I don't need to pay 30% tax.
Oh, right, okay. It's like a special way to invest without. Yeah, I understand what you mean. So, like, is that through the government or not? Is that like the government allows you to save so much money, like, without being taxed? That kind of thing.
Exactly. It's like a savings.
Yeah, we've got them in the UK. They're called ISAs, individual savings accounts, ISAs.
Cool.
And I think you have to lock them away for so long. I think you can't touch it for a year. Or they're all different.
It didn't seem like this one was, though.
I think they're all different. So maybe
just to take out, basically. But the problem with that is, if Bitcoin or anything just goes skyrocketing up, and I want to sell at that peak, and it's like a weekend or something, the stock exchange is closed.
I think you're going to get plenty of time. I mean, crypto, if you look at the last cycle and just go on to like, just click the weekly candle. So every then candle you see is worth 1 week. And it was above 50,000 for months on end. So you'll have plenty of time. It's not like you're a day trader and you need to get in and out, for a quick trade. Yeah. You're looking at the more macro picture, which is a 4-year cycle. So you need to buy low in the accumulation period, which is technically now we're heading into a bull run. Then you sell, at the height of the bull run or near what you perceive as the height of the bull run.
Yeah.
But a lot of people mess this up.
So when you sell, do you get like normal money back, or like what's?
Yes, you can. But the end game for all this is you won't want to go back into unless you want to stick with a superior currency. You want to stick with you want to stick in crypto, which is it's a capped supply. So you're losing your purchasing power on all your krona or pounds or dollars every single year, because through the inflation rate, because it's been inflated all the time. Where crypto, they can't inflate it. Obviously, it's very volatile and it goes all the way up and it goes, it can go all the way down 80%. So what I recommend
a fractional reserve system. We can thank that for.
Exactly. So, exactly. This isn't crypto is not a fractional reserve. It's it's a hard cap. It's the hardest cap. Oh, Bitcoin is like the hardest cap money we've ever had on Earth. Gold is also kind of a good store of asset because that is also technically hard cap. There's only so much gold, but the banks own a lot of the gold, and I think they artificially keep the numbers inflated because gold technically should be in a higher bull run by now, but I think it's been manipulated. What was I going to say? As the demand for gold goes up, you can mine more and more gold out of the ground. But with Bitcoin, as the price goes up, it's just going to come out at a set predictable rate. You can't increase, the output. It's just coming out at a predictable rate. And this year, May time, we're going to have a halving where the miners, who are technically the middlemen, because it's decentralized, we can talk about decentralization. So the miners are the middlemen. They take some rewards for securing the network, and their rewards are getting halved. So at the moment, there's this cryptographic puzzle every 10 minutes, and whoever wins this puzzle around the world with the fastest computer gets the reward of, now it is 6.25 Bitcoin, which is one Bitcoin is like 45 grand. So, it's quite a lot of money. But 10 years ago, this was 50 Bitcoin, and then it halved to 25 Bitcoin, then halved again to 12.5. Now we're at 6.25. And then we're going to have another halving in like 3 months' time. So this is really bullish because it's just it's tightening the supply, the issuance, tightening the issuance of it coming into the ecosystem. A good analogy metaphor analogy is, if you think of America, I think I've mentioned this to you before, you're really getting bored of this, you two, but if you think of America and then think of 50 oil rigs supplying America with oil, and the demand for oil stays the same, and every 4 years, half of them oil rigs get turned off. So you're getting half the amount of oil coming into America, but the price stays the same. What's going to happen to the price? It rockets up. And then another 4 years later, another halving happens, and then another 50% of the oil rigs get turned off again. So we've gone from 50 oil rigs to 25 oil rigs to 12.5 oil rigs. We're at 6.25 oil rigs now, and in 3 months' time, we're going to go down to 3.1 oil rigs, metaphorically speaking. So it's, you know, the supply is just getting contracted and contracted and contracted. It's getting harder and harder and harder. Out of the 21 million Bitcoins in circulation, 19 are out of the 21 million Bitcoins that are going to come into circulation, 19 million already exist or are in the ecosystem now. So we've only got 19, 20, we've only got like a few million left. 19, 20, 21. Yeah, we've got 2 million left.
Yeah.
We've got 2 million left. So it's just getting tighter and tighter and tighter and tighter.
There's a cap on Bitcoin. On the actual one that's called Bitcoin, there's a maximum cap.
Yeah, that's the quality of all cryptocurrencies. The three pillars are decentralization and it being a hard cap. So Bitcoin's hard cap is 21 million. It just so happens to be 21 million. Like something like Cardano has got 45 billion. Ooh. This is what's a lot cheaper. If you look at the price of Cardano, it's what, 50 something cents. It makes sense because there are a lot more of them. You know, there's 45 billion of them. Or
can just ask one thing, like, is there a difference between actually owning the physical one and owning the certificate, or is it like basically the same?
No. So this is the big debate at the moment, like allowing Wall Street to the party.
Yeah.
I mean, it's just how things are going to go. At the end of the day, you're not going to get lots of rich old people who are going to buy their own crypto and store their own keys on a nano ledger and, you know, go through all this technical jargon. And, you know, it's a lot to learn for any age, never mind, you know, someone,
what happens if all these old investors die?
I mean, exactly. If they die, if they die and they hold their own crypto, this could be an issue as well. This is what there's these multi-sig wallets where you can kind of share ownership of a wallet. So if anything does happen to somebody, like they do die, it's a multi-sig wallet where a partner or a family member or whoever, maybe two other family members, then get to come together with their seed phrases, and they can then, you know, have access to this person's funds. Something like that.
You always know these geezers who like, I'm not sharing with anyone. I'm not even giving it to my family. It's mine.
I mean, people do lose it. This is why people want to go down the BlackRock line route. Because it's just easy, you know, for them it's safer, it's regulated, it's safer, and you know, if anything happens, you know, to the crypto, or you know, someone loses it, it's not them losing, it's BlackRock, so you know, they're insured for all this kind of thing.
Okay.
So it's less responsibility.
So what's your prediction on BlackRock joining now? How much money are they actually putting into the system? And what
there are people thinking, they were talking about this today, actually. I was listening to podcasts all day about this. They reckon between 50 and 100 billion this year. And I don't know if that's just from BlackRock or just because there's 11 companies, you know, offering this service.
Yeah.
So a lot of money can come into this. This is like day one. So it's like we don't know exactly. We don't know until it happens, you know. But I mean, a lot of people I think have been on the sidelines. Like these people, these rich families have been on the sidelines because they don't really want to own it themselves. It's not regulated. You know, it could get banned. You know, countries have banned it, so they just don't know. They don't, you know, it's not safe. It's not a safe investment for them. So, but now it's opened up to these spot ETFs. It's like, you know, they've opened the floodgates really. So, I think this is why everyone was just so bullish.
Yeah,
Leon can stitch this together with his editing skills, maybe.
Yeah, it's time, man.
Wicked. What were we talking about
then? Well, BlackRock, what happens when they get into
the BlackRock? So essentially it's very good for the space. Obviously, hardcore Bitcoiners, they don't want people to be buying their crypto, which is like a token version through BlackRock, because they're not they haven't got full custodial of the Bitcoin, and they're not the true owners. But I think it's so decentralized at the moment. I don't think I don't think now it really matters, because this is like an asset where retail have had 11 years to front run the institutions. This never normally happens. Normally retail can't even get in on this game, and even if they can, it's just people with lots of money who can play the investing game.
Do you think that
this is
gonna like try and manipulate it somehow?
See, I don't know how they can manipulate it. I don't know how they can, because whether you own the majority of, even if they owned the majority of all the Bitcoin, it doesn't give them any extra say over the network to someone who owns just one Bitcoin. They've still got the same amount of rights. It still can't be printed. So I think this is just an amazing way for poor people, really, or people at the lower end of the economic ladder, to actually put money into something which is going to be a store of value. They get given money from work, and they're living paycheck to paycheck. And if they can't buy a house, which is a good store of value, I guess they could buy gold, but gold isn't so great at performing. I mean, Bitcoin has been the best performing asset in the past 10 years, and gold hasn't done nowhere near as good. So I just think it's very good. And with Bitcoin, you can buy a fraction of a Bitcoin. So you can buy £30. I don't know anywhere where you can buy £30 worth of gold. You need to buy like a bar of gold. I don't know.
Yeah.
So it's very accessible for anybody. So it doesn't discriminate, which is great in a way, because it also opens up commerce where commerce wouldn't have happened. So if someone lives in somewhere in Africa and they want to deal me some Bitcoin, I'm happy. I don't really care where the person's from.
Yeah.
I don't need to know, because the security is just baked in. It's baked in. When you send that Bitcoin, I know it's going to arrive in my wallet. Or when it does arrive in my wallet, that's it. It's secure now. I've now got it. And vice versa. So you can kind of do business with people. Say if you're going to sell someone something abroad and you want them to pay first, they can whiz you over some Bitcoin, and once you've got it, you can then relinquish the goods or the car or whatever you want to sell.
Yeah.
And it doesn't matter who you're trading with. But I think it's a very good way for a majority of people who won't otherwise be able to store their value somewhere. Where else do you store it? Other than a house, where do you store your value now? You don't, or do you store it in a car, Anthony?
Store it in the motor.
Do you store it in a motor, do you?
Exhaust.
Does it keep its value? Does it keep its value in the motor?
Yeah, definitely. It's the same moment as when you buy it at the car dealership. That's when you store it.
Well, for like a second. For a second. And if it was on a screen, it'd just be going like this, down, 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 down. In real time. You lose money on cars. Cars traditionally have always been a very bad store of asset. I heard a story once. I think it was in Greece. So in Greece, so there's been a few countries which have seen hyperinflation. I think Greece has been one of them. And Andreas Antonopoulos is this mathematician, scientist, computer guy. And he talks about Bitcoin all the time. He was saying he can remember when his family were buying white goods, so that's washing machines and dryers, to be a store of value. Just to give you an idea of how bad their currency was, they were buying fucking washing machines to store onto their wealth rather than the currency, because the currency is that bad. They were buying stuff which is we see as a bad store of asset, like a car, white goods, whatever. Anything electronic doesn't hold on to its value for a second, you know. So that's how bad it was in Greece. So yeah, something like Bitcoin is you know, it's well overdue, and I think the world is, you know, really yearning for this. Had that crisis happened in Greece now, rather than buying white goods and washing machines and dryers to store onto their wealth, they could just buy Bitcoin.
Yeah.
It's borderless. It's borderless. I can be in any country to buy a crypto.
What's the biggest like wealth difference between owning a certificate and owning the actual thing within your Ledger wallet or Trezor or whatever?
Say that again. Sorry. Who? I mean, the only people. Yeah.
The certificate that you buy, and
yeah. But that's only through BlackRock. That's only through It's only BlackRock who are issuing this kind of stuff. I mean, I've never purchased with them. They've only just started. They've only just opened this up like yesterday. It only started yesterday, so we've got like 1 day of history on this so far. But you have to go through an investment firm, and then they'll give you some pretend Bitcoin. I suppose they don't give you the physical Bitcoin. They hold on to it.
For people who don't know who BlackRock are, I mean, I'd say BlackRock doesn't really have the best reputation. So
definitely not. Absolutely. Yeah. They're awful. Yeah. I mean, they own they're the biggest. They own practically everything. Everything. Yeah. You pick an industry sector, whether it be the media, whether it be tech companies like Google or Amazon or Facebook, whatever. Whether it's the automobile industry or literally any industry, they're the top shareholders. It's Vanguard, State Street, and BlackRock. They're the three which always come at the top. So
is it a concern that they've just become involved with Bitcoin?
I mean, it's a concern for some people, but it's not a concern for myself. Like I say, they can't change the protocol. They can't expand the crypto supply. It's fixed. It's baked at 21 million, and because the average person has been able to front run Wall Street for the last 10 years, it means it's very decentralized. The majority of people are not Wall Street. The majority of people who own this asset are just average normal people, normal savers, Bitcoiners. So they believe Sorry.
What's the objective of BlackRock getting involved in this then?
I'm just trying to think of the downsides to it, really. I mean, I don't know how this is going to pan out. I think it's a good question. I don't know what the hang-ups are on this, really. I mean, I guess they're thinking they might start owning the majority or be the custodials of the majority of the Bitcoin. But it doesn't matter. They can't do, my Bitcoin still stays the same. And the more they keep buying, the more they get involved and the more crypto they accumulate, it just pushes the price of Bitcoin up anyway. And all that's doing is just getting, pushing the price up is the biggest educator. That's what Michael Saylor often says. He says, let the price be the educator, because you can talk about tech all day long and who gives a shit. But as soon as you start seeing Bitcoin crossing $100,000, everyone's like, what the fuck? What's going on here? It's, people take notice. And then the FOMO kicks in, which is the fear of missing out. And everyone's like, oh, and then the news that's talking is
a couple of years ago, it was nearly like $1 million for a Bitcoin.
Sorry?
Well, a couple of years ago, it was.
$1 million krona.
Yeah.
I imagine. Well, he got to $68,000. So I imagine that's like 90,000 Swedish krona or something. Sorry, 900,000 Swedish krona probably. Yeah, it's exciting, man. It's really exciting. I mean, once you learn about this, like the money is just the first application.
Yeah,
Bitcoin is a store of value, and then after this, we've got smart contract platforms like Cardano and Ethereum. It started out in Ethereum, but now you got others like Cardano, Solana, AVAX, etc., etc. So we can, we can do other cool stuff without a middleman, because it's always been the middlemen which take the profits, and the custodian as well. So it's like a bank.
Yeah.
They're the ones who could, like, now I don't know what it's like in your country, but in the UK, if you've got your money in the bank, you're not the owner of that money. The bank is.
Yeah.
Legally. They legally own your money. And if it goes to shit, I think you're insured to like so much money. But at the end of the day, what the hell are we doing with the middleman? If we can remove the middleman, you've then now in control of your own money, and you're saving it yourself. So
we've got any British crypto banks, like just physical banks that are actually in it?
No, I mean, even physical normal banks are dying off. Like Barclays is a big bank in the UK, and they just keep on closing down the stores, closing down. The smaller branches keep closing. And this is not just Barclays; it's all of the banks, because it's just a dying industry.
Yeah,
and there's no money in it now. There's not much.
Yeah.
I don't think they're making as much money, and people are looking for a good store of value. That SVB Silicon. There's this Silicon Valley Bank, and that went under. And that's when Bitcoin was at like 15 grand a coin, and it shot up. And I think people are just now starting to see it as this safe haven. And the more credibility people like BlackRock and all these, BlackRock's just one of 10 other companies who are offering this service. So it's giving a lot of credibility to the Bitcoin
I've been
space.
Looking at it a bit, and according to the American bank market, JP Morgan Chase,
yes,
are the biggest Bitcoin holder, and they allow Bitcoin to be bought and sold through them. I don't know, but that's just what I've read.
Yeah, I don't think they're the biggest holder.
Nah.
I mean, one great thing about crypto is it's all on an open ledger. Well, Bitcoin is anyway. You do get some privacy, what we call privacy coins, which are very sneaky and hidden, and you can't see the code and you can't see the ledger. But with Bitcoin, you can see every address for the last 10 years. You can see every transaction on the blockchain. So if anything, you can work out who these people are. Like, you can work out, like, some of the big holders of crypto are the exchanges like Binance, Coinbase. They're exchanging lots of coins. There's this software called Glassnode, and they do what's called on-chain analysis. So this is brand new. We've never had this before. We can actually look on chain to see who the fuck's got the money, where the money's going, and is it going to the small wallets or the big wallets, or the medium-sized wallets? And are they holding it for a long time? It's just amazing analysis we can do on an open system. We've never had this before. It's closed behind a walled garden.
Transparency, basically.
Complete. Exactly. Yeah. This is another. This is I mean, on the news, they try and say, oh, Bitcoin's used for drug dealing and this kind of thing, and it's just like, no, it's not. And if it was, it's just like the most stupid. You'd have to be a real idiot to use Bitcoin to transact on, because it's an open ledger and it's all transparent and you can see exactly where everything's going.
That's basically the argument that all the banks do. It's like, oh, it's going to terrorism, it's going to this, it's going to bad money, illegal stuff.
I mean, we've heard this before though, but it's like when the internet was born, and so the the internet was a disruptive technology which took over from the telecommunications industry, and this is what and because they were all the big boys at the time, and they were flooding the media, and saying, oh, you know, the internet's only meant for pedophiles and pornography, and there's, you know, we've heard it all before.
The internet was built by the Defense Department from the beginning. It was called ARPANET, which was basically
Oh, right, okay.
that they could send communications through.
Mm.
So, and it went from ARPANET to DARPANET to internet. So
right, yes, they had their own intranet, didn't they? So they had their own walled garden of internet where you know you needed permission to go inside the internet and transact and you know and send information. It would have been back then. But like the thing is, when the internet
guy said that internet was just a bubble and it was going to burst any minute.
Yeah,
the beginning of the internet, it's not going to be a big thing, man. It's just a bubble. It's going to blow anytime.
Yeah.
So how does, like, you know, since AI is one of these major topics these days, does that have any, like, you know, what will AI do with crypto and mining and stuff? Will that be a tool in any way for crypto or?
I think there's a company called Singularity Net, which I'm actually invested in as well. And so AI is it's going to be an incredibly powerful tool. So we want this incredibly powerful tool not to be in the hands of the few. Like, you know, like in a pyramid, you don't want the very few at the very top and the elites to own this amazing technology. You want it to be decentralized. Yeah. So this is why Singularity Net was born, because it wants to, you know, harness, you know, blockchain technology and let everyone own it and control it and, you know, add to it to make it better as well. So, you need a decentralized one, at least to combat, you know, the elites' centralized technology, centralized AI, because it's just crazy powerful. You know, when you hit that event, the event is actually called the Singularity. The event is when AI becomes as smart as humans. Because at the moment it's not as smart as a human. It's as smart as all AI is smarter than humans for narrow AI, as in a specific task, whether it's just playing chess or whatever. You know, any specific one narrow focused task, AI will just beat humans. But it's GAI, general artificial intelligence.
It can't outside the box. That's the problem.
It can't generalize. Yeah, it can't generalize. It can't predict as well. It's just not. It hasn't got the IQ in that respect.
No.
Of human beings.
Meditate.
It can't meditate. It definitely can't meditate yet. So yeah, it's powerful stuff. So the thing is, because technology is recursive, which means, you know, it's the day it's as powerful as humans. When it gets to that day, you know, a week later, it's 50%, you know, smarter, and then you know, 2 weeks or a month after that, you know, it's 10 times smarter, whatever. So, you know, it's gonna grow exponential, because this is how technology works. And the human brains can't really see in exponential. We only really see things in linear. But I think this is gonna be like big. This is why. What?
Game changer.
It's gonna be a big game changer. Yeah.
So when do you reckon like people in Sweden, for instance, can start just using like crypto in the shop when you go for your shopping?
You can technically do that now, almost. You can. There are services where you're given a card. In fact, have I got the card? It's a hand. No, I haven't. Have I got it?
Okay, just explain it just for the people.
So yeah, it's through a third party. You need a third party. I don't know loads about this, but you need a third party company or exchange, and you can load your own crypto. You'll have your own crypto account with them. And what you'd be able to do is use that, I think it's through Visa. It's like a little Visa card. So you can pay for whatever using your crypto, but the day you use it, I think it just gets converted there and then. And I think there's a small fee for it as well. But you know, some people use it, but at the moment, crypto is like this store of asset where no one wants to sell their crypto because it's going up in value. So why do you want to sell it? You know, the idea is to accumulate as much as possible, not use it as a day-to-day transaction thing. And that's because it's still in its infancy. You know, give it like another 15 years or whatever, and then when the price really steadies out and, you know, becomes less volatile, then people might start to use it and transact in the currency, in their currency of choice. Yeah, at the moment it's just speculation in investment, so no one really wants to spend their crypto. So it's not really a money yet. It's more of a store of asset. It's like gold. Like you don't spend your gold, especially because your fiat money is going down in value. Your cryptocurrency is going up in value. So you want to sell one and keep the other. You know, that's the idea.
Thinking like on the topic we were on before with like BlackRock.
Yeah.
Because usually, like when big companies buy, like accumulate loads of like what's it called, market share, they own after 50%, they get to own and influence the actual company and change the that it's being made.
Yeah, I don't think it's going to happen with. I just don't see it's going to happen. There are too many. Yeah, there are too many. I mean, it's exponentially growing. If you look at, you can see, because we're talking about an open system again. You can see how many brand new wallets are being created every day, and there's so many wallets. And then you can see how much Bitcoin's in these wallets, because again, it's all open. It's all open. And you can see how much Bitcoin is being transacted. And they give them the name. So somebody who's got loads of Bitcoin, they're called whales. So using this terminology, they've got like every size of fish. So you've got sharks, you got squids, and you got shrimps. And the shrimps are the shrimps. The shrimps are the plebs. You know, the shrimps are the smaller investor, and their wallets are just going through the roof. So they're getting into this faster than anyone else. Okay. And again, this is increasing, not decreasing. So yeah, Bitcoin is becoming more, has been for the last 10 years anyway. Every single year it's become more decentralized, as in into more hands. Because if you're a whale and you've got loads of crypto, you're going to want to take some profits on this, you know, and then you're going to sell some. So technically speaking, your crypto portfolio is going to go down over the years because you want to realize these profits. You know, you're not going to sit on like 1,000 Bitcoin for like 10 years and not take any profits. Although some people do this, and they can put this Bitcoin into smart contracts, but that's a whole other topic and subject, and that's even more complicated to speak of. But yeah, it's, in a nutshell, it's getting more decentralized. This is great for the little investor. It's permissionless. It's just so good. Especially for people who don't own a house. I mean, in the UK, it's very hard now to own a house. Houses have gone up. They're really expensive.
Yeah, the rent too is crazy.
I mean, it must be the same in Stockholm.
Wait, it's going like echo mode now. I don't know what.
I can hear myself.
Yeah, me too. Oh, good again.
It's gone off now.
Don't say it like that.
It's gone off now. I'm glad you heard it too. I thought it was me. I thought, shit, I can hear myself.
Yeah, I was like, it's in my mind.
Yeah. It's gone off now, so that's good. So yeah, I think crypto is it's a great thing. It's a great thing for the average person now who can't afford to buy a house. They can buy a little bit of Bitcoin. So another way of looking at crypto, not to go on about crypto too much, but imagine Bitcoin as what the cost of one house, or the price of a house. So like you don't need to buy one full Bitcoin in one go. You can buy a fraction of a Bitcoin. So you can buy £30 worth of Bitcoin. So you can't do this with a house. You have to buy the whole house in one go, and you need to go through, a financial advisor and, an estate agent. And there are many parties involved, and you have to buy the whole thing, and you have to get a loan and all the rest of it. Now, what Bitcoin allows the average person to do, and it's permissionless as well, you can buy one brick of that house, that brick, so to speak, which is a small fraction of crypto or Bitcoin, and just keep stacking these bricks, stacking these bricks, stacking these bricks. And it's permissionless, and you can then, and another good thing as well, is you can then sell these bricks as well. So you don't need to build a house with these bricks and then sell the whole house in one go. So these are the advantages of crypto over property. So property, I need to buy the whole thing in one go, and then I need to sell the whole thing in one go. With crypto, I can buy fractions of a Bitcoin, which is analogous to buying a brick at a time, and then I can sell them one brick at a time as well.
Yeah.
And to anyone in the world. So this house that I'm in now, it's only people in this local area who want to buy this house. If I own Bitcoin, or my bricks of Bitcoin, so to speak, as an analogy, I can then sell these bricks anywhere in the world to anyone. So it's a more liquid market, and it's just great. It's just, I can't speak highly enough of it.
That's awesome. Sounds awesome. So
it is awesome, mate.
But for the listeners then, what is your tips for the best investment coins at the moment?
Investment coins. I mean, there's 20,000 different coins.
I know, but just
This is well, I'll explain. So I mean, obviously you can choose to pick any coin, but the further you go down the market cap, so the smaller the coin is, the less recognized it is, the more speculative it is, and more risky. So you're best off, in my opinion, what I'll tell my friends and family to do is stay in the top 100 of coins. Stay in the top 100, and depending on your risk tolerance in your age, the younger you are, you can probably take on more risk, and if you're older and you want to maintain your wealth more rather than being less risky, I'd stay in the top, say 20 or say top 10 coins.
Okay.
Obviously the safest coin is Bitcoin, but the safer you get, the less upside potential you have.
All right.
But this is where you're paying for this risk.
So which is the most decentralized one?
I would say Cardano, actually. I would say Cardano. I'd say it's more decentralized than Bitcoin. So yeah, with decentralization, you look at how many people or how many nodes who are protecting the network, how many nodes it would take to gain a 51% attack. So a 51% attack is the majority of the nodes coming to a different consensus and to change the blockchain.
Yeah.
Ultimately, it's very hard to do with Bitcoin because they can get kicked off and all the rest of it. So it's still incredibly hard, and still far better than the system we have at the moment. But I think with Bitcoin, I believe there's 5 or 6 entities, and they're large, massive mining operations. You would need to co-opt to get a 51% attack. Now, cross-reference that with Cardano, they've got 3,000 nodes.
Yeah.
They've got 3,000 nodes rather than I think Bitcoin miners, there's maybe 20 big players, something like that. So 20 to 3,000, it doesn't even compare. So it's more decentralized straight away. So you need to co-opt 3,000 people. So yeah, for a short answer, yes, Cardano, I believe, is the most decentralized.
Cool. That's what I wanted to hear. I think you knew the answer for it, but I just wanted to share it with the listeners.
Yeah.
I'd like for Leon that doesn't know so much about crypto.
Yeah. Have you got any questions there?
Your experience with crypto investment.
I bought some crypto for like 333 krona, and that's it. And now it's
gone up, huh?
549 krona. So I mean, I don't have much to say about it because I don't know much about crypto, and it's just like I usually say to Anthony, if everyone starts using it, I'll probably use it as well. But it's still like, I'm trying to listen, trying to follow along, but I'm like a lot of people, you just like, I mean, I'm not that interested in normal money either, or finance. I'm like, I didn't study finance. I'm more into arts and stuff.
Yeah.
But I mean, it's interesting though, because I mean, like, we need an alternative to the corrupted system that's going on now. So I still find it interesting, but I mean, like, I'm just not going to be at the lead of this. I'm like open for other people to like do this, but I don't have much to say about it myself actually. So that, I mean, I've got the odd question here and there, but like, I'm not against it. So but I'm not as excited as other people are, and that's why I'm in the background.
In the background, yeah. At the end of the day, it's just a good way for you to store onto your wealth and it not see it drain away. You know, I mean, obviously, if you haven't got loads of money in the bank anyway, you're not seeing your normal money drain away because you haven't got the normal money in the bank anyway. But as an investment and speculative investment tool, I think crypto could serve you well, and I think you're going to get the highest returns through crypto investing rather than traditional investments. It's a highly disruptive technology which is growing exponential. So it's like Metcalfe's law, the more people who get involved with crypto, the better. And again, the wallet addresses are going up, and the more useful the system becomes. Like if you were the only person in the world with a mobile phone, that network of is useless because there is no network. You're the only person with a mobile phone. So the next person who gets the mobile phone, you can now talk to each other. So it's it's somewhat got some value. And then every extra person now that buys a mobile phone and joins your network, it means that the network is becoming exponentially more valuable. Every extra person is more valuable, more valuable, more valuable. And then it will be looking like it's a valuable network to join. So people are more interested in it. It's just like, has a nice feedback loop. So the more
Leon,
people
are you taking notes, Leon?
Yeah. I think I'm bored him. I think I'm actually bored him. Is he asleep? Is he asleep?
Nearly.
Okay,
I mean, I feel like a little kid sometimes. I'm just like, the adults are talking about something. I'm gonna just draw something.
Okay, but we have to wrap it up anyway. It's like probably at the most 5 minutes left.
Okay.
So, how is life in general in England then?
It's okay. It's a bit cold at the moment. It's not as cold as Sweden. It's not snowy.
Zero now. It's 0.0 at the moment.
Oh, is it?
Yeah. So it's slushy.
I don't know what it is here. I'd normally look on my phone, but my phone's being used for the Zoom call. Don't know. It's pretty cold. It's pretty cold, and it's still dark, but it's not as dark as you. So you've got it colder and darker. I've just got it wetter. I've got it wetter. But yeah, it's going
5 degrees in London at the moment, but that's some.
Oh, there you go.
Yeah,
it's probably close to that. Yeah, something like that. Yeah.
No snow then.
No snow, mate. No, I haven't seen snow. I don't think here. This year, I don't know if we've had snow. I don't think I've seen snow in the UK. This is how little snow we get. Maybe some frost. That's it. That's about it.
Yeah.
Well, like you, what have you been up to anyway? What have you guys been up to recently?
tidying up.
Tidying up. It's looking
Just
tidy in your bedroom.
the new year's started, so I'm just trying to get rid of stuff, thrown out old shit.
Yeah.
Getting stuff together for the new year. That's already started. But
yeah,
January's not really an exciting month, is it? So it's
no, it's not at all.
It's sort of like one of these preparation months for the rest of the year. Like you're trying. So yeah, that's what I've been up to. Just working, tidying up.
Yeah. You need to do a jingle. You need to do a little jingle for this podcast.
Yeah.
So I think. Sorry, go on.
No, I was just going to explain what I've been doing. I've been building
go for it.
A computer.
Wicked.
Yeah, so I've installed water cooling and updated the RAM. Changed from one case to another case, another chassis, as you call it here. I don't know if it's called the same there. Chassis.
Is it like so is this where all the components go into a liquid to keep it cooler? So
exactly,
it's a special type of water, like deionized water or something, is it? Or something?
Oil, I think.
Oil. Yeah. How is it?
I would think it would be some like vegetable oil type thing, but I don't know. I'm not sure.
Right, okay, right. It's one with it's non-electrical.
Yeah.
Non-corrosive.
Exactly.
I guess. Yeah, that's true.
You can basically build your computer in an aquarium if you want. You can build it and then shove vegetable oil in it, and it won't do anything.
Amazing.
I've seen people do it. It looks crazy.
Is this for like a really? This is obviously a game. Is it for gaming or what? What are you using this for?
Show you.
Are you going to show me?
It's going to make it a bit more exciting here.
The
computer.
I think I briefly saw it when was that there over Christmas.
Yeah, this is the.
Yeah, it looks cool, man.
That's the water cooler for the season.
Looks like a rave.
Yeah, a mini rave.
There's less than 1 minute left now, so better start wrapping things up.
What I was going to say, we could wrap it up by saying I think this podcasting could be your thing, Leon. We know Leon likes stand-up comedy. To do stand-up comedy, and I think it takes a certain type of person to do stand-up comedy. Like I couldn't do it, and I think if you ask like 1,000 people, you're going to get less than like 20 people who say they want to do stand-up comedy. So the fact that you like doing stand-up comedy and you like that kind of limelight type thing, so you've obviously got an itch for it. I think this kind of podcasting could be your little itch. You know what I mean? It could be your little thing. What do you think?
Yeah, I think I totally agree. So I hope to see you all again soon on maybe a more topic that I will not be as lost in.
Yeah, I'm sorry to lose you on that one.
No.